Here are 10 things that can cause hyperinflation. Number 1. Excessive money supply. Governments may print money excessively to finance deficits or repay debt obligations. When there's too much money in circulation relative to goods and services available, prices rise rapidly. The central bank's failure to control the money supply can result in hyperinflation. This often happens in countries with unstable governments or economic mismanagement. Hyperinflation caused by excessive money supply erodes the value of savings and hinders economic planning. Number 2. Loss of confidence. A loss of confidence in a nation's currency can be triggered by political instability, corruption, or economic mismanagement. When people no longer trust their currency, they seek alternatives, like foreign currencies or tangible assets. This increased demand for foreign currency can drive up exchange rates and inflation. Central banks may respond by printing more money, worsening the problem. The loss of confidence in a currency can spiral out of control, leading to hyperinflation. Number 3. Fiscal deficits. Persistent budget deficits occur when a government spends more money than it collects in revenue. To bridge the deficit, governments may resort to printing money, increasing the money supply. This, in turn, puts upward pressure on prices and can lead to hyperinflation. Addressing fiscal deficits through responsible budgeting and taxation is crucial to avoid hyperinflation. High levels of public debt can also contribute to fiscal instability and hyperinflation. Number 4. External shocks. Events like wars, natural disasters, or economic sanctions can disrupt a country's economy. Such shocks can lead to a loss of productive capacity, reduced output, and shortages. In response, governments may print money to finance reconstruction or meet basic needs. This injection of money without a corresponding increase in goods and services can result in hyperinflation. Managing external shocks effectively, both economically and politically, is crucial to prevent hyperinflation during crises. Number 5. Speculation and black markets. Speculation in currency markets can lead to rapid fluctuations in exchange rates. These fluctuations can create uncertainty and encourage people to hoard foreign currencies. Black markets for goods and foreign exchange can emerge as people seek alternatives to the depreciating national currency. Prices in these black markets can be significantly higher than official prices, contributing to hyperinflation. The existence of black markets and speculation can further erode confidence in the national currency. Number 6. Collapse of production. A collapse in a nation's productive capacity, such as agricultural or industrial output, can reduce the supply of essential goods. When the supply of goods is limited, prices rise rapidly due to increased demand. Economic turmoil, war, or natural disasters can disrupt production and distribution systems, exacerbating hyperinflation. Investment in infrastructure and the restoration of productive capacity are essential to reverse this trend. Government policies that encourage production and trade are vital to stabilize prices. Number 7. Hyperactive wage increases. In an environment of soaring prices, workers often demand higher wages to keep up with living costs. Employers may comply with these demands to retain a stable workforce. Rapid wage increases can lead to a feedback loop, as businesses pass on increased labor costs to consumers through higher prices. This wage price spiral can further drive up inflation rates and contribute to hyperinflation. Balancing wage increases with productivity and price controls can be a challenging task during hyperinflationary periods. Number 8. Banking crises. A banking crisis, such as a wave of bank failures or a loss of confidence in the financial system, can lead to a loss of trust in banks. People may withdraw their savings from banks to avoid losing them in a collapse. The reduction of deposits in banks can limit their lending capacity, negatively affecting economic activity. Government responses, such as deposit guarantees or bank recapitalization, may involve printing money and contribute to hyperinflation. Ensuring the stability and confidence in the banking sector is crucial to prevent financial crises during hyperinflation. Number 9. Monetary policy mismanagement. Central banks play a critical role in controlling inflation through monetary policy. Ineffective policies, such as keeping interest rates too low for extended periods, can stimulate excessive borrowing and spending. When central banks fail to control the money supply, inflation can spiral out of control. An inability to respond appropriately to economic challenges can result in hyperinflation. Effective coordination between fiscal and monetary authorities is essential to avoid monetary policy mismanagement. Last but not least, political instability. Political instability and uncertainty can lead to erratic economic policies. Frequent changes in government, coupled with shifting economic strategies, can create confusion in the business and financial sectors. This uncertainty may lead to capital flight and a loss of investor confidence, both of which can exacerbate hyperinflation. Political stability and consistent economic policies are crucial for maintaining confidence in the national currency. Leadership that prioritizes economic stability and responsible governance is essential. There you have it. 10 things that can cause hyperinflation. It's important to remember that hyperinflation is a complex economic phenomenon, and multiple factors can interact to create a hyperinflationary crisis. Preventing and managing hyperinflation often require a combination of economic, financial, and political reforms tailored to the specific circumstances of each situation. These factors often interact in complex ways, and their relative importance can vary from one hyperinflation episode to another. Combating hyperinflation typically requires a combination of fiscal discipline, responsible monetary policy, and structural reforms to restore economic stability. Thank you for joining us on this enlightening journey. Together, we can explore the fascinating world of knowledge, one video at a time. If you found this video helpful, don't forget to like and subscribe for more videos like this. Until next time, stay curious and keep exploring.